Dear investor, Nuvama Private, formerly Edelweiss Private Wealth, is pleased to present you the latest issue of Investment Strategy Report for June 2023. Let's take a look at key highlights of May 2023. FY23 ended on a positive note, with the Indian economy surprising positively and posting a growth of 6.1% from a year ago during the fourth quarter of FY23. GDP growth for FY23 stood at 7.2%, beating the second advance estimate of 7%. Public sector investment was the major contributor to GDP growth. Massive FX sales and higher interest income helped to deliver higher net profit for the RBI, despite another year of significant provisioning owing to higher MTM losses on foreign and rupee securities, leading to a bumper dividend to the centre at more than 2.2 times of FY24 PE. On the India macro side, demand-side indicators remain anchored, depicting strength in the economy. May 2023 witnessed the 12% higher GST collection on year-on-year basis, and non-food credit growth also indicated a good start to FY24. Quite a few supply-side indicators are also showing mixed signs of recovery. Services and manufacturing PMI continues to be strong. However, unemployment rate continues to remain a pain point. On the global front, major developed and developing economies witnessed a drop in the inflation. The marginal relief in the persistent high levels of inflation could prompt the central banks across the globe to put a pause in hiking the interest rates further. On the global front, economic indicators seem stagnant. Manufacturing PMI falls below the expansion line, and US bankruptcy filings were at a 13-year high. Equity view. Regarding Indian corporates, Q4 FY23 witnessed stabilizing margins, majorly due to the easing of input prices for the majority of the sectors. Aggregate PAT for our coverage swelled to 15% year-on-year, riding on large swing in OMC profits and strong growth in BFSI. FY23 BSE 500 ROEs at 10-year high, and FY23 corporate capex picks up almost after a decade. After the overall Indian equity markets witnessed correction in FY23 amidst the market volatility, markets have gained positive momentum, leading to investor confidence. Continuous heavy inflows from FIIs also indicate strength in secondary markets. Mutual fund AUM hit all-time high in April 2023. The global inflationary pressures have started to cool off. However, the central banks may hold on to the elevated levels of interest rates till the inflation stabilizes. Most of the developed economies may continue to face slowdown. India's Q4 FY23 GDP numbers underscore country's economic resilience in the face of global headwinds. Indian corporates posted strong profitability as well as pickup in capex in Q4 FY23. The participation of retail investors in Indian equity markets remain resilient, while FIIs continue with their buying spree. Considering the current global as well as domestic economic scenario, we remain neutral on equities. It will be prudent to be neutral on mid and small cap allocation as well. Fixed income view. This was the first wholesale price deflation since July 2020, amid a further drop in cost of manufacturing. Annual inflation rate in India slowed sharply, the lowest since October of 2021, and below forecasts of 4.8%. Food inflation came in at 3.84%, the lowest since November of 2021. 10-year yield curve saw a sharp drop as on 31st May 2023. In Feb and March 2023, we had highlighted the opportunity of allocation to duration strategy in a calibrated manner, which seems to have panned out as expected till now. The drop in CPI and WPI levels provides comfort that RBI may continue with the pause in rate hikes. The drop in the 10 years yields has helped for duration call to pan out as envisaged till now. The yield spreads of high quality as well as high yield papers have reverted to their respective long-term average. Hence, the investors should be very selective while choosing high-yielding papers to gain commensurate risk premium. Core allocation to high-quality yield-oriented papers is preferred. Investors can consider to lock in the yields as per their requirements with hold to maturity perspective. Investment in securities market are subject to market risks. Read all the related documents carefully before investing.